Tell us, what is oil and gas reserve reporting?
Oil and gas reserve reporting is a comprehensive reserve estimate and classification of a company's reserve and reservoir assets, either for a particular field or for company-wide, multiple fields. It's a strict industry sanctioned guidelines delivered by, assessed by a professional engineer who certifies his findings and the economic viability of this reserve report and the reserves within it.
What goes into a reserve report?
A large diversity of things. It has to be comprehensive to the financial viability of a property, which will include its oil and gas contracts, the prospects of its future contracts, and extending the price of both oil and gas over a long period of time through the production life of the reserve. Costs, both operational and development costs, any kind of money that has to go into recovering those reserves have to be considered to test its financial viability. Tax considerations, all different kinds of taxes that these oil and gas properties would be subject to, royalties to pay their royalty owners, the mineral owners, and risk contingencies. They have to consider the upside and the downside of all of these elements that go into the economic story, the model that validates these reserves as recoverable financial reserves. It is certified. It considers regulatory and environment impacts, lease maintenance, and even considers the risk or the lack of risk to the access of the properties to implement this whole entire financial model.
Why do companies need reserve reports?
As owners, understanding from a third-party independent assessor what the value of their properties are, and to be able to represent them to potential buyers should they decide to sell, or quite often, if they are trying to sell their properties, they will be asked to provide a third-party reserve report that a potential buyer would audit and work their own numbers from. So it's a starting point even for a startup public company or any public company. They're required to have 30 third-party reserve assessments.
Why is it important that reserve reports come from an independent third party?
Because it's an independent opinion. It's not prejudiced by the owner, and it's not prejudiced by the seller. It's intended to be independent, unencumbered by motives of buyer or seller.
How often should you get reserve reports?
The reserve reports are typically needed once a year.